Welcome back to another video. Today we have none other than Steve Penny. He is our regular market analyst, researcher, and update every single Friday on your investments, on the economic and financial systems, on precious metals, gold, silver, mining stocks, uranium. And this happens every Friday to deliver the most value that we possibly can to you. So if you enjoy this and you like having Steve on, give us a comment right there down below and let us know that you enjoyed this. Give us a comment down below. Hit the like button right over there and right over there. That's the other way you can let us know that you enjoy this. And last but not least, be sure to support Steve's work. Right there down below is the free newsletter called Silver Chartist. The reason I had Steve on is because I went through the free newsletter and I was blown away. I said, Steve, this is better than most people's paid newsletter. This free alone is going to be worth a lot of money to folks. And I said, can you come on and do a regular market update for us? And so that's what we're going to be discussing here in this video. And I want to encourage you to sign up for free to Silver Chartist in the description and pinned to the comments right there down below. That's Steve's newsletter.
All right, guys, Steve Penny here with another guest post on Jake's I Love Prosperity channel. Today is Friday, April 9th, 2021, where we come together every Friday and do a very brief update on silver, uranium, and gold. Those are the three markets that we are laser focused on the Silver Chartist report, which is a free report that goes out every Sunday afternoon. And I'm really passionate about talking about these markets and these topics. And I enjoy doing these updates because, to be honest with you, not many people want to talk about these things. So it's really nice to connect with like-minded people and get to have the opportunity to share my thoughts. So with that said, why don't we go ahead and open up this little PowerPoint I put together, and we'll take a look at some news items and some charts. All right, we'll start off this week by taking a look at a couple of relevant news items, then we'll go ahead and open up some charts. So the first thing I want to talk about is that the March FOMC minutes were released this past Wednesday, and really no surprises here. Easy money is here to stay. It's not going anywhere. The Fed is going to continue its accommodative easy money policy. And really, they're stuck between a rock and a hard place. If they allow interest rates to rise, that will prick the everything bubble. Conversely, if they continue to suppress rates and continue with their easy money policy, inflation is going to run hot, and we would expect to see negative real interest rates, which will be a tailwind for the precious metals and commodities as a whole. The second item that caught my eye here is news from Endeavor Silver. They've chosen to hold back over 500,000 ounces of silver that was produced in the previous quarter in anticipation of higher prices going into the second quarter of 2021. Now, I personally applaud that decision, and I would like to see more silver miners do that. First Majestic has done that in the past, and if just a few of the bigger mining stocks, silver miners, did that, that would really put even further strain on the supply-demand fundamentals that are already very tight in the silver market. And I think that will bode very well for Endeavor, and I look forward to hopefully seeing some more silver miners do the exact same thing. Another news item that's really been unfolding for the last month here, and that's that uranium miners are actually going out into the spot market and buying spot. Now think about that. Imagine an oil company going out and buying oil off the market, or a silver miner going to the COMEX and buying silver. And the reason the uranium miners are doing this is because for many of them, it's actually cheaper for them to go out and buy spot than it is to pull the uranium out of the ground. And that really highlights the incredible opportunity that's here in uranium. Now, a lot of the uranium miners have moved pretty far, pretty fast here, but I continue to believe we're in the early innings here. And the uranium sector is just ripe for a raging bull market, and we continue to expect to see that unfold in 2021. These mining stocks and physical-backed ETFs have already taken almost 10 million pounds off the market just in the last month, and that's a significant percentage of global supply. In 2020, I believe it was just under 150 million ounces were produced, and if they've taken 10 million off the market just in the last 3 weeks, that's very significant. And it puts further pressure on the utilities to begin their long-term contracting, which will be the big catalyst for the uranium sector. And then finally, I thought this was noteworthy. This just came out this morning. The new Secretary of Energy, Jennifer Granholm, said nuclear power is going to play a critical role in America's clean energy future, which means it is more important than ever that we invest in developing the brain trust. And she goes on with that quote. But it is crystal clear that the U.S. government is going to be pro-nuclear, and nuclear is going to be a growth industry, not just here in the United States, but globally. And as that industry grows and more reactors come online, that spot price is going to have to rise. And there's only less than 70 or so pure play uranium miners globally. So it's a very small market. And when big money flows into this sector, it's going to be fireworks to the upside. Turning to a couple of charts here, I always like to look at this chart. And this is the commodities versus S&P 500, showing commodities have never been this undervalued relative to paper assets, specifically the S&P 500. And you can make a case here that we're starting to turn around. And whenever things get this far out of whack, they tend to not only revert to the mean, but overshoot to the upside. And I think we're in the very early stages of a multi-year bull market in commodities. And I think silver, uranium, and gold will be the prime beneficiaries of that bull market. Here's a chart of the 10-year Treasury note showing this 40-year downtrend line. And we're just now approaching an area of significant resistance. So I wouldn't be surprised at all to see nominal rates roll over here and maybe begin to trend a little bit lower. Now, however, if they do continue higher, we've got this 40-year downtrend line that every time this line has been tapped over the last 40 years, rates have turned lower. I also want to note here that rising nominal rates does not have to be bearish for precious metals. In fact, in the last few bull markets, precious metals and nominal rates rose at the same time. Here's a chart for gold. We've been pointing out these two primary patterns for gold. And the first one was this triangle pattern here that goes back 18 months. And you can see this uptrend line. Every time this line has been tapped, boom, we rallied right off of it. We came back and tapped this line twice in the last 3 weeks. And both times, this support level has held. And you could also make a case that we formed a double bottom here on the chart over the last 3 weeks. So I think gold looks pretty constructive here. However, we can't confirm a technical reversal until we get back above this 200-day moving average and really above the upper boundary of this downtrend channel that you can see right here going back to August. Getting back above this line will signal a resumption of the uptrend in gold. So just to reemphasize here, the most important line to watch on this gold chart is the upper rail of this 8-month downtrend channel. Once we get above that, I think it'll look really positive on the charts for gold. Silver continues to look stronger than gold on the charts. It is back above a rising 200-day moving average. We broke out above this little downtrend channel here this week, and now we came back tested the 200-day moving average, and then today on Friday we're trying to bounce off this 200-day moving average. The chart here looks very constructive, and getting back above this $26 area, which coincides with the 50-day moving average here in blue, would make this chart look even more constructive, and an eventual break above this $30 area up here will really signal a resumption of the uptrend in silver and likely pave the way for significantly higher prices. I like to use a lot of ratios in my analysis, and this is a ratio chart comparing the junior silver mining ETF, SILJ, versus the spot price for silver. And what we see here is going back over the last 8 years, the junior silver miners continue to be historically undervalued relative to silver itself. And in fact, the junior silver miners are still the most undervalued component of the whole precious metals complex. So you've got the senior gold miners, junior gold miners, senior silver miners, and the physical metal. And of all those different sectors, the junior silver miners are the most undervalued component, where we focus most heavily right now at this phase of the cycle. Here's a chart of GDX tracking the senior gold miners, and this chart actually looks pretty encouraging. You can see this 8-month downtrend channel right here, and FBO, that stands for false breakout. We've had two kind of fake out moves in the past 8 months here, and now we're trying for a third time. We broke out above this channel for the third time. We're above the 50-day moving average, and now this upper rail of this channel is support, and that's reinforced by the 50-day moving average. So let's see if we can hold here. I would anticipate maybe a back test of this level prior to a resumption of the rally, and then getting back above this 200-day moving average would be the first sign of a technical reversal for GDX. Just like silver looks stronger than gold, the junior silver miners look stronger than the gold miners, with SILJ back above a rising 200-day moving average and a rising 50-day moving average. And you can see here this morning we came back down and tapped the 50-day and then rallied off of it. So let's see if we can close back above this 50-day moving average on a weekly basis. And you can also see down here, we've got really strong support at this green uptrend line. Last week, or a couple weeks ago, as we came back and back tested this line, I sent out an alert to our members that I was personally adding to my long-term position in SILJ, and that's worked out really well so far. And this is really strong support. We've got support at the 200-day moving average and the 50-day. So SILJ continues to look strong here. There is pretty significant resistance up here between 17 and 1763, followed by the recent high of 1884. Here's First Majestic. This is honestly probably my favorite silver stock, and we've been tracking this symmetrical triangle pattern that you can see right here. Guys, technical analysis does not have to be complicated. It can really be pretty simple, and what I found is that simple technical analysis outperforms its complex counterparts almost every single time. And as we approach the apex of this clear triangle pattern right here, we got this nice powerful breakout that happened on decent volume, and now we're back above a rising 50-day moving average, and First Majestic continues to look constructive here. I would view any further backtests or weakness as good buying opportunities for me personally. Although, always know I don't give personal advice, so don't take anything I say on these videos as personal advice. But this 1457 level is very strong horizontal support. You can see we came back and tested that again last week and rallied right off. Now, while our focus is primarily on silver, uranium, and gold, I do track the battery metals, and our favorite battery metals are copper and nickel. So the chart for copper looks very constructive here. It's above a rising 50 and 200-day moving average. We came back last month and rose all the way up to $4.36, which was pretty close to its all-time high, up near $5. And the uptrend remains intact for copper. We're above its 50-day moving average, and we're approaching the apex of a triangle pattern. And I would look for an upside breakout, which would project a short-term target of $4.36 on copper. Nickel has fallen back sharply. It's above a rising 200-day moving average. You can see up here this RSI. This tells you when something is overbought or oversold. So you can see whenever you're above this red line, like we were back last month, that signals we're overbought and due for a pullback. Now it's the opposite is true. We've pulled back really sharply here, and the price for nickel is oversold and due for a rebound. We've got a couple of unique ways to play these sectors and these trends, and a really nice royalty company that we've been tracking and we're looking to accumulate in our newsletter. All right, turning to the uranium miners. First, let's take a look at the spot price of uranium. Now, normally when I show this chart, I show a zoomed in chart here for going back to 2017 that shows this clear uptrend channel. But really this time I want to zoom out and show you where price has been. The uranium spot price was up near $140 in 2007 and as high as $94 as recently as 2009. So you can just show how undervalued this sector is. Now keep in mind, I say this every week, but these uranium miners, most of them need $50 at least $50 to incentivize the new production that's going to be needed to meet the growing demand for nuclear and uranium. So with a spot price down near $30, this reeks of opportunity from my perspective. Here's the URNM ETF. This is my favorite ETF and favorite way to track the uranium sector. And you can see we remain right near the all-time highs. And on a weekly and monthly chart, almost all of the uranium stocks are a little bit overbought on the RSI. So I would like to see some backing and filling here. But like I said before, this sector is just so small that when big money comes in, it has the potential just to keep running. So I view pullbacks towards this 50-day moving average as pretty compelling. Below there, you've got this green uptrend line and then horizontal support down around $50. Cameco is the blue chip uranium miner of the whole sector, and I really like to trade this stock because it respects technicals very well. So you can see here we got this nice breakout, high volume breakout right here above the 200-day moving average. Now typically when you get that, you get 3 to 4 back tests of the 50-day moving average before the trend needs to kind of pause. And you can see we got this nice breakout, came back and tested the 50-day moving average right here, rallied, tapped the 50-day moving average right here, rallied, came back again a couple weeks ago. Right as this was happening, I sent out an alert to our premium members at Silver Chartist that was initiating a trading position, and we got this nice rally again. And we were stopped out here for a small loss. Now, of course, that's trading. 90% of my portfolio is long-term investing, but that 10% I like to trade. And we had a really nice little short-term gain here as Cameco bounced off its 50-day moving average. Right now we're approaching the apex of the symmetrical triangle pattern, and we continue to be bullish on Cameco over the long term. Jeff Clark recently did a really nice write-up, in-depth write-up on Denison Mines in our premium edition of the Silver Chartist report a couple weeks ago. And right as price broke out above this symmetrical triangle pattern right about here, I issued a long-term buy alert. I personally added shares, and we got a nice rally, so we're consolidating here. I would look for the 50-day moving average to hold as support. Below there, you've got really strong long-term support that you can't see on this chart, down around 84 cents. And Denison Mines continues to look constructive here. All right, guys, so we'll go ahead and wrap it up here. I would encourage all of you to go check out silverchartistreport.com, get our free weekly letter. The next edition will be coming out this Sunday. We're putting together a really robust report after taking last weekend off for the Easter holiday. So look forward to seeing you guys again next week. Have a great weekend, and God bless.
Okay, thank you for watching this video. So if you enjoyed this and you want to see more regular market updates from Steve, from Silver Chartist, be sure to hit the like button on this side right over there and this side right over there, and leave a comment down below and let us know if you enjoy this. If so, we'll keep making more of these. Now, I want you to go to the link in the description, in the comments right there down below. That's to sign up to Steve's free newsletter. Like I said, I had him on because it's literally the best free newsletter that I'd ever seen. And I said, Steve, I'd love to have you as a regular market update. And, you know, we're going to create the most valuable sector that we can on YouTube to help as many people as as possible. And so if you want to take it the next step, learn mining stocks, really the in-depth of what's happening in mining stocks, in gold, in silver, in the overall financial markets, in uranium. If you want to see this all broken down, that's the Silver Chartist newsletter. There's a free link to it right there down below in the description and pinned to the comments right there down below. Last but not least, hey, thank you, Steve, for coming on here today, educating and informing us on what's happening in the world.